Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds to 9 o'clock, with news of a sudden bout of risk aversion by investors. The CBOE VIX took a dramatic jump higher at the end of trading on Wall Street, in fact to its highest level since 2011. This was because equity markets fell. China was down 4.3%, Europe 3.2%, and the US was down 3.2%. And commodities fell. The CRB index was down 1.7%. And US interest rates and the US dollar also fell. Concerns about China and fresh Greek exit risks were the main drivers. And not helping, American manufacturers say August brought the slowest improvement in business conditions for 22 months. Markets ignored that the country was on its annual holiday shutdown. A similar survey in Europe reported stable growth. The index levels for both regions were similar. But it was China's data that caused investors to worry the most. Factory output is sharply lower in August, much more so than expected, and its lowest level in more than 6 years. The Wall Street Journal is reporting that Chinese central bank is about to release a flood of liquidity, up to $150 billion, by dropping its reserve requirements on banks by 0.5%. On top of that, China plans to let its main state pension funds invest in the stock market for the first time, which at the 30% level they've signalled could bring in another $250 billion of support. China's moves aren't doing anything by halves. Watching all this with some unease will be many key central bankers who are gathering at Jackson Hole, Wyoming for their annual conference. And at least one heavy hitter is lining up US Fed policymakers with a warning not to raise rates at their next meeting. China's wobbles couldn't come at a more inconvenient time for the Fed. However, there is a view that the equity market correction is overdue, needed, and a healthy sign. We've had the longest bull run in stock market history. In New York, US Treasury 10-year yield benchmark dived on Friday and is now at just 2.05%. That's its lowest level since April. The oil price is also low and now down to $40 a barrel, with Brent crude now down to $45 a barrel. There is no sign the oil glut is lifting. The gold price is up sharply again as the gloom descends, now at $1,160 an ounce. This week may be a rough one. There is little data to be released and northern markets are still on holiday, fertile ground for volatility. The New Zealand dollar stands out from all this turmoil as something of a safe haven. It starts the week firmer at 66.8 US cents, 91.5 Aussie cents and 58.8 Euro cents. The TWI is at 70.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.